Okay, so I'm kind of running out of synonyms to describe what my eyes are looking at every time I open up this damn app and I go and look at this graph. So you know what, today I'm not going to say anything and I'm just going to go over to my pies like I usually do, and I can see that we're doing generally okay. I'm going to be honest though, I did something very uncharacteristic of me this week. I let my emotions get the better of me and I allowed one of my boys, I don't even know if I can call him one of my boys anymore, but I allowed him to convince me to reallocate my risky section of my portfolio so I would welcome in more Tesla shares. And of course, the day after I assigned, I think it was 30% of my pie to Tesla, it dropped. And now look at where we are at. And if it wasn't for my overweight positioning in Tesla, then my risky section of my portfolio would also be in the green, as well as my other pies. So obviously I had to thank my friend for his services over the last 10 years that I've known him, and I cut him off. I don't need him whispering sweet nothings into my ear anymore. And I have also decreased my desired allocation for Tesla stock back down to 9.5%. And I think this situation just showed me that I don't want to be too overweight in one stock. I mean, especially with Tesla, given that it's so erratic. But yeah, apart from that, the rest of my pies are in decent shape and I'm apparently ahead in 3 out of 4, so not too shabby if you ask me. So coming on to my top, let's start with losers this week. We flipping have Tesla, don't we? So Tesla stock price has been doing up a madness recently. I think it was last week that news broke out that they weren't going to be included within the S&P 500 index for this cycle, which kind of surprised a lot of people because after they released good earnings earlier this year, many people were expecting it to walk into that index. And why this inclusion is so important to Tesla's price is because being included in the S&P 500 would mean that all these passive funds that track the S&P would then have to purchase more shares of Tesla, which would then increase the price even further. But this exclusion from the S&P started its downturn, and along with the whole decline in sentiment of the technology sector of the market, prices just decided to tank even further. And so is my luck to buy a larger portion of shares when it was around the $490 range. But yeah, I do think though that as long as Tesla don't F up between now and whenever the new stocks are added to the index, they'll surely get in right. I mean, I know a lot of their revenue recently has come from the fact that they are good environmental Samaritans, and by this I mean because they don't pollute the earth as much, they get rewarded for that. And I think it was actually their previous quarter, or the most recent quarter, where they released their earnings, that if they hadn't received the rewards from being good earthly Samaritans, then they actually wouldn't have made profit. So this could actually be the main reason why the S&P 500 committee, or whatever they're called, didn't include Tesla within this cycle. But yeah, we'll see what happens, and maybe they'll change their mind if Tesla decide to generate profits and revenue in a more meaningful way. Okay, so my second to last loser was Apple. Similarly to Tesla, Apple suffered at the hands of their technology sell-off that we saw over the last 2 weeks. And just as they went up with a disregard to the fundamentals, we have also seen them fall without full acknowledgement of their fundamentals. By this I mean, not a lot has changed with their business model that would signal the event for the magnitude of this drop. However, there has been some news surrounding the company that would likely suggest why this stock has fallen over the last couple of weeks. One of them being around that they won't announce their new flagship iPhone until October. And then I saw Goldman Sachs, specifically a guy called Rod Hall, reiterating his sell rating on Apple, believing that it would fall more than 30% to $80. And his reasoning for this is because he believes that Apple's services and wearable segments are failing to offset the slowing sales of iPhone. He uses Intel to make an example of how a large cap tech stock can fall with disappointing news reaching the ears of the investors. Saying all this though, this guy first brought around his sell rating for Apple in April, and ever since then it has gone up around 70%, and he has been quite wrong in his forecast, so take his estimates with a massive load of salt. And in addition to this, with Apple gearing up for 5G with their new iPhone cycle, even though it's delayed, it's interesting to see why this guy still thinks Apple will suffer this sort of drop. So in my opinion, I'm not going to be listening to what this guy is saying, given his poor track record. I bet right now he's loading up on Apple stock. He's just trying to play everyone with his sneaky little tricks. No, but in all seriousness, he's an analyst for Goldman Sachs, so he must be smart to be in a position that he is in right now. But there is one important price action point to look out for with Apple. So let me just go over to TradingView real quick. So as you can see at the moment, Apple is trading at what, $112. I've added a line here at around the $110 mark. So we can see that the last time Apple traded below here was around early August. In addition to this, this red line here is the 50-day moving average. And we can see that Apple has used this as a support. So whenever it comes down to this red line, we can see it's been bouncing off it quite steadily. And actually the last time it was significantly below this red line was around February, March, where we had the market crash. And if we come down to the bottom of the page, we can see that the RSI is approaching oversold territory. I mean, it's still quite a length away, but it's getting there. So I think if the price does drop below this 50-day moving average and breaks that support, then we could start seeing a downtrend in Apple's price. But yeah, that's something that I'll be watching into next week. I'm not a trader. I'm not a professional trader. I'm not even an amateur trader by any means. So please do not take this analysis as gospel, and do your own research before following anything that I do, because I am not the guy you want to be coming to advice for when it comes to trading. Alright, enough of Apple and Tesla. Let's have a look at some of our top winners this week, starting off with a stock that I can guarantee not a lot of people know, and that is Celsius Holdings, which simply put is a company that makes and sells calorie burning drinks, fitness beverages I should say. So they sell calorie burning fitness beverages. It's a funny stock to invest in, even for my standards, but it seems as if it's getting a lot of traction in the United States, and I thought I might as well get involved. I admit it's not the perfect stock, which is why I hold it in my risky section, but I think it's one that has potential. There wasn't any specific news to come out this week that told the story of Celsius's increase this week. They did bounce off their 50-day moving average, so I guess the reason for their uprise this week is purely technical. Over the last couple of weeks, they have been subject to good news, with private investments and loyal customers continuing to purchase their products. So along with the technicals, this may just be a continuation of an overall positive sentiment. Coming on to my top winner this week, we have Uber, which is up, what is it, 11%? Yeah, up 11% for me this week, because the company has announced that it wants to help drivers switch to fully electric cars by the year 2040. They formed a partnership with General Motors with an S, and Renault Nissan Mitsubishi Alliance. General Motors have been moving nuts recently. Didn't they do something with Nikola too? I bet they're looking at Tesla and thinking, yeah, I want a piece of that. But yeah, this just shows that Uber are looking at their future and figuring out better ways to run their business, as well as also recognizing that it would help drivers to save money and support clean air ambitions in major cities, which evidently impressed investors. So those were my top movers this week, but now it's time to get into what's been happening with Nicky corporations, of which I used to be an investor of, but sold out because I admittedly invested into it without any knowledge of their company or hydrogen vehicles, and just went out on a whim. But Nikola have been really stinking it up recently. I haven't really been keeping up with them completely, but I'm pretty sure that they've done a deal with General Motors to help produce one of their trucks, which is good news for them. However, and it is a big however, because a short selling investment firm, first of all, that's crazy to me that these types of firms exist. I never knew. A report that the company's December 2016 unveiling of the Nikola One truck was fraud. Alright, so hear me out. The story goes like this, right? Back in December of 16, the chairman of Nikola, Trevor Milton, described the truck as being fully functional, which wasn't quite true. The truck didn't have a hydrogen fuel cell, nor did it have the motors and gears required to drive the wheels. So my guy Milton said that the parts had been taken out of the truck for safety reasons. In short, the truck that Nikola displayed 3 years ago was not anything like they had described, and they blatantly lied about it being functional. But hear this. The new report, which I'll leave in the description, claims that the scale of Nikola's deception was even greater, stating that their quote-unquote functional dashboard was powered by an extension cord which came up from under the stage. If that's true, then that's cheeky. Trevor, that is very cheeky. I don't know what you guys are up to over there at Nikola, but that's very cheeky. So basically, Nikola didn't have a working prototype, and apparently an anonymous source provided this investment firm with a text message dating back to late 2017, which read, "We haven't touched the truck since the show. Can't imagine how much work it would take to get that to run." But there's more. There is more. Another text exchange that centered around the January 2018 video that showed the Nikola 1 truck supposedly driving down a highway. Apparently, it seemed like Nikola planned to tow the truck to the top of the low-grade hill and let it roll down. It had located the spot where the video was filmed, a 2-mile stretch of road near Grantsville, Utah. With consistent 3% gradient and with the right camera angle, it looked like the ground was flat, but it was actually steep enough for the vehicle to pick up significant speed. An investigator actually took an SUV to the top of the hill, put it in neutral, let it roll down, and it reached 56 miles per hour. Safe to say that my guy Milton was pissed, and he went to Twitter saying that allegations were, and I quote, bullcrap, and mentioned that he was going to work through the night to release a rebuttal, which he actually didn't decide to release in the end, and instead filed a complaint to the SEC for false and deceptive reports. As mentioned before, this short selling investment firm benefits from falling stock prices, so it would be wise to not take everything they've said as gospel. But only time will tell who's right and who's just been waffling. I mean, if Nikola have just signed with General Motors, you would hope that these allegations are false, but as I said, we'll just have to wait and see, innit? It's just all a bit mad that they get good news with GM just to be brought down a couple of notches with that report. Anyhow, I'm going to leave things there and I'll be back. I don't even know when I'll be back, maybe in 2 weeks time with another portfolio update addition to my online diary, if you want to call it that. But yeah, I'll catch you in a bit.